Remember back in 2001 when America's seventh largest company, Enron, just collapsed? Well, 20 years later, a crypto empire called FTX did the exact same thing. You get this feeling like you've seen this movie before, and it turns out you have, because there is a recipe for these disasters, a pattern that just keeps repeating with terrifying precision.
$32 billion. Let that sink in. That was the peak valuation of FTX, what some people are calling the modern Enron. This was a company built by a supposed math genius that promised to completely change the world of finance, and just like all the others, it pretty much vanished overnight, taking billions of ordinary people's dollars right along with it.
And that really is the million-dollar, or in this case, billion-dollar question, right? How does this keep happening? From Enron's crazy energy schemes to Theranos' fake blood tests to FTX's cryptomania, how do these huge, celebrated companies get so many smart people to believe in something that just isn't real? Well, it turns out it all starts with the same basic set of ingredients. Okay, let's get into it.
So, here's how we're going to break down this recipe for disaster. We're going to look at the 4 key ingredients. First up, you've always got the visionary founder. Then, there's the magic black box they're selling. That's protected by the culture of hype. And finally, you get the great unraveling, when the whole thing just comes crashing down. Okay, so ingredient number 1. Every single one of these massive corporate disasters starts with a great story. And every great story needs a great storyteller. We're not just talking about a CEO here. We're talking about a messianic figure, a true visionary who promises not just to make you money, but to create a better future for all of us.
I mean, just take Elizabeth Holmes. Her pitch was never about some new medical device. It was a revolution. The idea that you could diagnose hundreds of diseases with a single drop of blood, that's a story about ending pain and suffering. It's a narrative so powerful, so compelling, that nobody even wanted to question the details.
And it's the exact same playbook Jeff Skilling used at Enron. He made it very clear they weren't some boring old pipeline company. Oh no, they were building the future. They were an asset-light tech company that traded in abstract concepts, not physical stuff. The vision was just so grand, so huge, it was basically impossible to pin down.
And this quote right here from the Wolf of Wall Street himself, Jordan Belfort, man, it just perfectly captures the sales pitch. It's such a classic move. When the details are a little fuzzy, you sell the dream. You just focus on that big, beautiful upside and make people feel like if they ask too many questions, well, they just don't get it.
And this is where it gets really wild, right? You look at this incredible gap between the public persona and the actual reality. Holmes was sold as the next Steve Jobs, but in reality, she was a 19-year-old college dropout with no finished product. Belford was this Wolf of Wall Street, but he got his start selling meat and seafood door to door. Enron's Ken Lay was Dr. Ken, the trustworthy PhD economist who is secretly overseeing one of the biggest frauds in history. That persona, that's always ingredient number 1.
All right, so you've got your visionary founder. That brings us to ingredient number 2. Every visionary needs something incredible to sell, and it's almost always a magic black box. Some kind of product or process that is so complex, so revolutionary, that normal people aren't even supposed to understand it. And you know what? That's the whole point.
Enron's black box wasn't a physical thing, it was a financial one. It was called mark-to-market accounting. Now, it sounds super boring, I know, but trust me, this was their superpower. It let them sign, say, a 20-year deal and then immediately book all 20 years of projected, imaginary profits as if it were real cash in the bank. Today, it created this total illusion of insane, off-the-charts growth, even on deals that ended up losing a ton of money.
I absolutely love this quote because it just cuts through all that confusing jargon. And this is exactly what Enron was doing with all their shady shell companies. They were basically selling their own garbage assets to themselves and then turning around and calling it a profit. The complexity was just a smokescreen to hide how completely absurd the whole scam was.
Now, the black box at Theranos was a little more literal. It was the Edison machine, the supposed heart of their world-changing promise. But inside the company, everyone knew it was a complete joke. It couldn't do what they claimed. So for all those big investor demos and public presentations, they just faked it. They'd run the blood tests on normal, off-the-shelf machines they kept hidden in the back. So you've got the visionary. You've got their magic box. Ingredient number 3 is the environment you create around them, a culture of intense, nonstop hype. This is where you manufacture so much excitement, so much fear of missing out or FOMO,
that anyone who dares to question the story is made to feel like a fool or even a traitor.
And wow, does this slide show you exactly how that strategy works? Theranos put together this board of absolute titans, political legends, military giants. Did any of them know the first thing about blood diagnostics? Of course not. That wasn't the point. Their names created this powerful shield of credibility. I mean, if these guys believe in it, who are you to doubt it?
But here's the thing. Even with all that star power, the most basic, fundamental questions often go completely unanswered. This quote from a Wall Street analyst talking about Enron is just perfect. Everyone was celebrating the company, cheering it on, but almost nobody could actually explain in simple terms what it was they did. The hype had become a total substitute for substance.
And that hype, it can be incredibly seductive. We're not just talking about a few naive investors. Fortune magazine, one of the most respected business publications on the planet, named Enron America's most innovative company for 6 straight years, right up until the year it completely imploded. The echo chamber was just massive.
Stratton Oakmont really perfected the mechanics of hype with their classic pump and dump scheme. I mean, this is the recipe in its purest, most raw form. You get control of some worthless asset, you create a ton of artificial excitement with a boiler room of screaming salespeople, you drive the price up to the moon, and then you dump all of your shares on the very believers you just created.
But here's the thing about hype. It can't last forever. Eventually, that magic black box actually has to work. The profits have to be real. The visionary has to deliver. And when they can't, you get the fourth and final ingredient in our recipe, the great unraveling. And believe me, it is almost always brutal and it is always fast.
I mean, just look at this chart. In a little more than a year, Enron stock went from over $90 a share to just 26 cents. All of that so-called value, all that innovation, all that hype, gone, wiped out in the blink of an eye. See, the collapse is never a gentle slope, it's a cliff.
And what's so frustrating is that so often the warnings are right there, inside the company. This memo from Enron VP Sharon Watkins was sent straight to the CEO just months before the company went bankrupt. The truth was known, at least by some people, but that culture of hype was just too powerful to let it get out, until it was way too late.
And we saw that exact same domino effect with Theranos. It all started with just one investigative article in the newspaper. But once that first crack in the facade appeared, the whole thing just crumbled. Regulators swept in, the company was dissolved, and the visionary founder ended up a convicted felon. Reality always wins, period.
So here it is. This is the big takeaway. The recipe is unbelievably consistent. You start with a charismatic visionary who is selling a world-changing dream. You give them a magic black box that nobody is allowed to fully understand. You wrap the whole thing in a deafening culture of hype to shut down any doubt. And then you just wait for the inevitable, spectacular unraveling. Look, this isn't just a history lesson. This pattern, from Enron to Theranos to FTX, it's a warning. The same ingredients are being mixed together in boardrooms and in pitch meetings as we speak. So the real question we have to ask ourselves isn't just who's next. It's, now that you know the recipe, will you be able to spot it before it's too late?